A very good morning to you. Thanks for joining us on Business Morning. I am BC Adebayo. We'll kick off today's show with the Q1 2020 capital importation data released this morning by the Statistics Office, showing the total value of capital importation into Nigeria stood at $5.85 billion in the first quarter of 2020, representing an increase of 53.97% compared to Q4 2019 and 31.19% decrease compared to the first quarter of 2019. Now, according to the National Bureau of Statistics, the largest amount of capital importation by type was received through portfolio investment, which accounted for 73.61% of total capital importation, followed by other investments, which accounted for 22.73% of total capital, and then foreign direct investments, which accounted for 3.66% of total capital imported in Q1 2020 by sector. Now, capital importation by banking dominated the first quarter of 2020, reaching $2.99 billion of the total capital importation for the period. The United Kingdom emerged as the top source of capital investment in Nigeria for the first quarter of 2020 with $2.9 billion. This accounted for 49.68% of the total capital inflow in the first quarter. And by destination of investment, Lagos State emerged as the top destination of capital investment in Nigeria with $5.13 billion. And this accounted for 87.72% of the total capital inflow. By bank, Standard Chartered Bank Nigeria Limited emerged at the top of the capital investment in Nigeria for the period with $1.65 million. Of course, this accounted for 28.3% of the total capital inflow for the first quarter of 2020. Of course, we'll talk more about those numbers in just a moment. But meantime, oil prices are higher today thanks to increasing faith in the market that producers will stick to commitments to cut crude supply. And that's in addition to the fact that more cars are back on the road as coronavirus lockdowns are eased around the world. Brent crude futures were up 1.72% to $36.12 a barrel, adding to a 1.1% gain on Monday in thin holiday trading, while US WTI crude futures gained 3.43% to $34.39 a barrel. The market was boosted by comments from Russia reporting its oil output had nearly dropped to its target of 8.5 million barrels per day for May and June under its supply cut deal with the Organization of Petroleum Exporting Countries and other leading producers, a group known as OPEC+. Russia's energy ministry on Monday quoted the minister as saying that a rise in fuel demand should help cut the current global surplus of around 7 to 12 million barrels per day by June or July. Now, let's drill down on the capital importation figures for the first quarter 2020 released today and Nigeria's Q1 2020 GDP data, which was published yesterday. And a quick reminder of the GDP data from the NBS yesterday indicated that the economy grew slower, with real GDP coming in at 1.87% year-on-year, as against 2.55% year-on-year in the previous quarter. Now, that growth outturn has been received with mixed feelings due to the macroeconomic slowdown ushered in by the coronavirus and, of course, the impact of crude oil price crash towards the tail end of the quarter. I have the Chief Executive of GDL Asset Management, Mr. Kola Ayeye, here with us in the studio to unpack the GDP report and the just released capital importation data. Good morning, Mr. Ayeye. Thanks for coming on the program.
Thank you very much for having me.
Now, one would have expected that very little money came in the first quarter of the year. Of course, that's due to the coronavirus pandemic that has had negative effects on the economies. But to see a 53.97% jump, does that not come as a surprise to you?
Well, it does. It actually is a surprise. And to that extent, you know, it's a positive surprise. But I think it's important to look in detail at why we're attracting investment at a time when the expectation is that the world should be careful and everybody should watch where the money is going.
So looking at it now, we actually saw more capital outflows from the emerging markets within the period. Why didn't this actually reflect in the capital importation data?
Just facing it, you know, a $5 billion capital inflow in the kind of global environment that we have, on the face of it, will be positive. But we need to look a little more at those figures. I mean, the figures have just been released. From what we can see, it still appears as if, I mean, it is very clear that we're not getting the kind of investment we need. We're a country in need of growth. Growth does not come from portfolio investment. It comes from direct foreign investment. Direct foreign investment is still a puny $250 million, 3.66% from what you just read. For a country like Nigeria to grow, it needs capital that comes with experience and skills. That's what foreign direct investment is. That's the money that builds factories, that builds companies, that builds economies. Portfolio investment comes into instruments that represent companies that are already running very well. So that's an important thing to note. The other thing to note is that a big part of this portfolio investment is actually going into money market instruments, not even bonds. So when people are coming into investments and they're sticking with money market instruments, they're not even buying government bonds, it means they're saying, I want to get out as quickly as I need to. And when rates have come close to zero, I think either UK or Germany recently issued instruments at negative rates for the first time in a long time. It probably means we are offering them returns that they can't get anywhere. So while it's good to attract $5 billion, the question is at what cost? If $2.53 billion of this money is going into government instruments, if it's going into instruments that are issued at double digit, and if they're getting those instruments at conditions that almost completely takes away their foreign exchange risk, it means that those funds are coming at extremely expensive costs for us. I mean, like you said, if at this time investors are knocking down your doors, writing checks, you need to pause and say, what kind of price am I paying? If you're even locked into bonds, I mean, the bonds are issued over a few years, but the bulk of this, it seems as if more than 50% of this quarter is a money market instrument. And it's not too different from what we've had in some other years, but I think the increase particularly is that they're not getting this in other places. And we can't as a country celebrate until we start to see direct foreign investment. That is what will bring companies that have succeeded in doing specific lines of business in different parts of the world, saying they want to have a stake, do that here. And that's what will employ labor. That's what will cure unemployment. That is what will stay for the long time. That is money that isn't going to jump out the door or have a run on your currency if you have a little problem, because that money is here to stay. I don't think we should really celebrate much. I think this is money that we are paying a whole lot for, and what we should be asking ourselves is, where are we going to find the money that will stay here and that will transform the economy? The kind of monies we are getting is it's high pressure, high intensity, high velocity money that takes a leave, as quickly as is necessary if there's any problem.
So in essence, you're saying that we should be worried about the level of portfolio investment.
Oh, clearly. What Nigeria, as indeed other developing countries, need is we need direct foreign investment. For example, look at the things that build companies. So people are saying $5 billion out of that investment came to Lagos. Where are the factories? Where are your friends, your colleagues, your relations who have just got jobs because of this money that came in? There is none. That money is not here to build the economy. It's here for the high return and to get out. It helps us to stabilize because it's available. It's money that we can use, but it's not money we should celebrate. In all of that $5 billion, all the direct foreign investment is only $250 million. That is what we need. I often say that portfolio investment is like the window to a house. You must have built the house. So the window or the door allows you to get in and to get out, which is an important convenience for a house. But when you have not built a house and you are building windows and doors, hey, you don't have a house. So it's money that's good for cushioning some of the pressure on the dollar, but that's even just in the short run. It's not something we should celebrate. We should tell ourselves that the hard work we need to do to attract the kind of foreign investment we need is still hugely work in progress. If all we can get is $250 million.
And what would this hard work be, looking at the numbers? We saw FDI rising marginally by 3.66%. So what are the economic uncertainties that contributed to this figure? And what are the hard work? What's the hard work that we should do?
You know, some people need to be pragmatic and need to be realistic. You know, I think in her letter to the IMF, the Minister of Finance alluded to a number of things, including a margin of exchange rates in different markets. You know, those things are important. You don't want to, investors want to feel that if they're at the point of coming into a country, that the exchange rate is predictable and it is reasonable, you know. So, I mean, the exchange rates that exchange rate market needs to approximate a single rate. We need a situation where even compared to the black market, that single rate is not more than a 2, 3, 4% margin. You know, that's one. Then the second thing is that, you know, one thing we need to keep telling ourselves, we need to design projects, policies that play to our strengths. In the last few years, we have been getting about as much money, sometimes a little more, from remittances, diaspora remittances, as much as we're making from oil. I think we need to tell ourselves that it is the Nigerians here who have money abroad, and the Nigerians abroad who are earning monies abroad who are going to bring in capital to build this country.
Well, won't the remittances drop now due to the effects of the COVID-19
So you
pandemic?
see, the remittances will drop because of COVID. But COVID is not going to remain with us perpetually. You see, what I'm saying is, how do we position so that if Nigerians can send $25 billion home every year, usually this $25 billion is not for investment. It's take care of my mother, buy me a house or something. How can we get Nigerians to now be major investors? How can we do things that a Nigerian who has a house abroad can take a mortgage as part of it and send the money home? Because the investment outlets that we're presenting to them are extremely compelling. That needs to be done. If you actually ask me, you see that direct foreign investment, in the short to the medium term, it's not the Oyinbos and the foreigners who are going to bring money here to develop this country. They are going to keep playing on the foreign portfolio investment end until we earn the right, you know, until they feel we have ended. But you see, in this time, we need to look at what is feasible. Yes, this year, you can't expect people who have been supported by government of the countries where they're domiciled to send a lot of money, but they represent the major source. I believe it is possible. If people without any incentive send $25 billion, when the world stabilizes, if we make that a major focus and have the private sector lead it, that segment can send us 2 times that, or 3 times that, or 4 times that. And that is where the hard work needs to be done. We need to cultivate them as much as we are cultivating these foreign investors who give us portfolio money.
Now, you've talked about policies, you've talked about the exchange rates. Now, the MPC meeting holds on Thursday. So what are some of the policies that you expect to see? What policy direction would you actually like to see from the central bank?
You know, at this stage, you know, your options aren't many. You know, you take, it's good to take the hard decisions when you have the room. You have the room when you have the foreign exchange buffers. You have the room when the exchange, when the reserves are at a high level. We're at a point where, compared to situations where we've had over $50 billion of reserves, we're struggling to be around 30. Oil prices at 36 dollars this morning. I just expect very marginal changes, because I don't think the policy environment, I don't think the economic space is at that point where CBN has a lot of room to maneuver. The government is so heavily borrowed, and because government is so heavily borrowed, you have the situation where interest rates on Nigerian treasury bills, the one issued by government, are being kept artificially low, have little attraction to other people. The foreign investors are getting 14%. In normal times, you will expect that interest rate to start to move up. But even if that is what classical economics say, I don't think it is affordable. So I really don't see how I don't see how CBN is going to make major changes. One thing that could be done, but I'm not sure that is something we could exhaust in one session. One thing that could be done, you see, even that $30 billion, a time must come when, in the way that Central Bank manages and places that $30 billion, it more actively supports its need for low interest rates and stable exchange rates. What do I mean? If you multiply $30 billion, I'm not saying the official rate is 400, I think it's 380, but just for ease of computation, let's say it's 400. That means today, the Nigerian reserve position is 12 trillion naira equivalent. Nigerian banks can't come up with 12 trillion. So we need to, like I said, this is not something we can exhort in one session. We need to sit down. CBN needs to sit down, appoint 1, 2, or 3 banks, the most stable and the most ethical and the most transparent banks. And those ought to be also significant holders of our foreign reserves, not only as deposits, but as significant purchases of the local currency. You see, except when the naira is under pressure, the way we manage our foreign reserves is that we only limit the use of our foreign reserves to the defense of the naira. We have this concept that reserves are only good when they sit with a foreign bank. There are, at least I know 1 or 2 Nigerian banks, particularly one, because I'm not here as their peer. If it was up to me, at any point in time, 50% of our reserves will sit on the balance sheet of 1 or 2 Nigerian banks, either as placements or they purchase it with local currency. We don't have to confiscate naira from Nigerian banks. We can put $3 billion out, $5 billion out, and say buy it. But those will be 1 or 2 banks that we monitor and audit continuously, because we cannot afford for those reserves to be mismanaged. There's absolutely no reason why a Nigerian bank that is rated by Fitch as AA should be preferred to a JP Morgan or an HS. Should not get the same foot in the door as an HS. It's a Nigerian organization. And then what is more, we said there is excess liquidity in naira. One of the ways to take it is sell them the damn foreign reserves. Sell $5 billion to 1 or 2 of some of them will be coughing, including the most liquid of them. Bring $5-7 billion out and say buy it.
All right, Mr. Ayeye, we'll continue this conversation in just a moment. Please just hold on to your thoughts. We'll continue the conversation with Mr. Kola Ayeye in just a moment. Please stay with us. Welcome back. We still have the Chief Executive of GDL Asset Management, Mr. Kola Ayeye, here with us in the studio. Now we'll be talking about the GDP data, which was released yesterday. Tell us, how would you react to the slowdown in growth for the first quarter?
For several years, we have really not grown. You know, if you asked me to make, if I were to make a comment about the GDP figures, the most disappointing thing is its failure to disappoint. You know what would have been disappointing or surprising is to say GDP growth was 7%, 8%. It would have been a pleasant surprise. You know, a country with population growth of 3% and with per capita income of just about $2,000 and with the largest population of poor people in the world needs to be growing at double digit. 1.87% is an apology. It means poverty is deepening. So, you know, there is really, to quite sincerely, it doesn't look pretty, and it has been like that before COVID. I think COVID impact may even make it worse, but it's not much to celebrate. You know, those figures, we are not growing enough. You know, like I said to you, it's when we reach double-digit growth that we say we are now transforming this economy. The report has 46 subsectors. Only one grew above 10%. If you go between 5 and 10%, only 4. And you see, for each of those 4 sectors, there are questions which are raised. So financial institutions, banks grew by 24%. They are not large employers of labor. Telecoms grew by 9%. One weakness of telecoms has been the need for improved governance. It is one sector in which its growth and prosperity hasn't been sufficiently democratized. We don't see the suppliers and the counterparties who work for telecoms who have prospered because of the prosperity of telecoms. Aviation grew by 5%. Aviation is a sector with very weak linkages. And then oil grew by over 5%. Oil just still shows. So out of the 46 sectors, only one grew above 10. And only 4, inclusive of that one, grew above 5. And then 17 of the 46 had negative growth. That's a long list. You know, 17 had negative growth. And among those that recorded negative growth are some which are worrying. You know, electricity had a modest negative growth of 2%, but it is worrisome because of the low level and the problem of electricity. And then the areas where we should be achieving growth and diversification, like solid minerals, the report says it crashed by 83%. I wonder whether it is gray mining that the economy is not able to capture 3%. And then refining reduced by over 50%. And, you know, if you look in the news, recently, over a 3 or 4 year period, NNPC has spent about $400 million on turnaround maintenance. You know, 230 billion on expenditure of the refineries in 2030, and the refining has reduced by 50%. You know, it also shows our weak investment in social services. Education grew by less than 1%. Health grew by just about 1% for a country that is growing at 3%, and with the quality of public education. So, quite frankly, these GDP figures I don't see what should be celebrated. And if we have time, and if it's not out of context, you see, I think we're actually at a time where we should be asking ourselves, in our measures of economic growth, are we measuring the right things? Or should we change the things that we measure?
So what are some of the things that you think should be changed?
Okay, you see, in economic history, a guy called, an economist called Simon Kuznets, I think he won a Nobel laureate prize, he became a Nobel laureate, was the one that popularized the use of GDP as a measure. That was his seminal work. Now, you see, the context of that was adopted only recently in 1944. And what was the context? There was the war problem, and Americans were seeing that they had to join the war. And they were already recovering from the economic problems of the 20s and 30s. So Americans were concerned that, do we have enough money to put in this war? That was one. So you see that the adoption of that measure had a context. And then what had happened by 1941 was being adopted. You had a period of 1750 to 1850 when the Industrial Revolution had taken place. The rail lines had come. or the second industrial revolution, automation had taken place. So what I'm saying is that you are looking at countries that achieved significant level of economic development. So by the time they started to use GDP as a measure, they weren't waiting to build railway lines, they had built it. They weren't waiting to have power plants, they had built it. Their life expectancy for women was approaching 70, men was about 65. I'm saying that where we are at our context, shouldn't we call a colloquium? Should we call a meeting? Should we put some intellectuals together and say, you see, the kind of things we measure, when we report on it, either quarterly or half-yearly, government should be on its toes. The private sector should be on its toes. You see, these things, we announce it, and it just seems is an announcement. And let me say something. I think that the Office of the Statistician General is doing a great job. I think he's one of our best minds in the public service. I think the quality of the accounts that are prepared are first class. I think that office has largely been insulated from political pressure. You know, you will see when China reports its GDP figures, the world casts doubts on it. The figures and the studies that comes out of Nigerian Bureau of Statistics are respected. That's very good. But I am no longer sure that the kind of things we need to measure that will put us on our toes are these things. We need to measure the things that will make growth happen. Do you get what I'm saying? You see, growth hasn't happened for several years, and we keep giving this report card. This report card is not leading to a change of behavior. The reason why your headmaster or headmistress gives your son or your daughter a report card is it is meant to reinforce the right behavior and cause a change of behavior. The people who started using this GDP, there are a lot of things that they had done that were already in place by the time this GDP was adopted. We haven't done those things. So we should now create a set of composite measures that will create those things that will then force economic growth. I mean, if you ask me, I think, I personally, for example, think we can't progress with the level of corruption. We need to find a measure, a simple measure, that says this is the quantum of corruption that happened in the last 6 months. And that puts figures to it. That government has spent 5 trillion. The private sector has spent X trillion. X percentage of it was lost to either waste or corruption. You see, by the time that starts being refined, and that standard is now also being attached to specific ministries and specific sectors, those are the things that we need to change. We need a report that says, this is how many kilometers of rail that should have been done. This is what was done. This is how many. You see, that's what is relevant to our position. And then we need to think of how to communicate this in a way that when we have announced it and explained it, the market women see how it relates to them and they ask questions. The students in school who expect to be employed see how it relates to their employment prospects and ask questions. I have tremendous respect. I think if I had to name, I don't think I would name 3 public sector organizations before naming the NBS. And that's my honest opinion. But I think it's time for the economic intelligentsia, the economic practitioners to come together and say, what Kuznet did worked for America. When these figures are announced in foreign countries, everybody is waiting and behavior is changing. Here it's not so. Let us measure the things that will make both the public and the private sector change behavior, or at least be on their guard, so that we can then start to achieve growth. We can't be growing population at 3% and be doing 1.87% growth. It means poverty is deepening. This country can and should achieve double-digit growth.
And we'll hope to see that happen. Many thanks, Chief Executive of GDL Asset Management, Mr. Kola, for coming on the program.
Thank you very much. It's a pleasure.
Moving on now, the 150 million federal bond Sukuk recently announced a debt offering of 150 billion naira 7-year sovereign Ijara Sukuk at 11.2% with a maturity date of June 2027. Now, the debt program is open for subscription from May the 21st, 2020 and closes on June the 2nd with a settlement date of June the 9th, 2020. For joining us now to look at this investment opportunity is the Head of Investments and Research at Lotus Capital, Ndakwa Mijindadi. Good morning and thanks for coming on the program. Well, let's start off with the previous offerings of sukuks. There's been 2 sukuks raised by the federal government in the past. As an investment banker now, tell us what the federal government has used these funds for.
Thank you, and thank you for having me. So the sukuks that were issued, the first one was issued in 2017, and that was for 100 billion. The second one was issued in 2018 for an additional 100 billion. Now, both of these offers were used to fund the construction and rehabilitation of roads across the country, the 6 geopolitical zones in the country. The first sukuk was used to fund about 25 road projects, while the second sukuk was used to fund 28 road projects.
Now, why is this 150 billion naira sukuk actually needed at this time?
Well, that's a fantastic question. So you'd see that everybody talks about the level of infrastructure in the country and the need to improve our infrastructure stock. Roads is one of these major infrastructure that is needed in Nigeria. For this 150 billion, actually, the federal government is going to increase the amount of road project that is doing from that 28 they did the last time to 44. So imagine that 44 road projects. The last speaker, Mr. Kola Ayaya, was talking about how when you do projects, you need to see when you raise money, you need to see what that money is being used for. So in this instance, when the government raises this 150 billion, it's going to construct over 800 kilometers of roads, which, I mean, you'd agree is very useful for the country.
And are there tracking mechanisms for the projects that the federal government will be utilizing the funds for?
Yes, they are. So there are project management consultants that have been employed who go around all the projects to make sure that the funds have been utilized specifically for what they were used for. And it's on the basis of this construction that the funds are being paid to the contractors on these projects. There are also signages that have been placed on the roads for each section that has been constructed with sukuk. If you're traveling on the road, you'd be able to see a sign that says sukuk funding starts here, sukuk funding ends here. So there are a lot of tracking mechanisms.
Tell us, what are the benefits for the investing public?
So the benefits are a lot. Obviously, there's the idea of responsible investing, being able to see that the money that you're investing is being used for socially impactful projects. There's the opportunity for very competitive returns. The rental rate on this sukuk is about 11.2%. There's also the possibility of liquidity for those who come into this investment. It's a 7-year tenured instrument, but it will be listed on the Nigerian Stock Exchange and the FMDQ Securities Exchange. So there's possibility of liquidity. There's also possibility of financial inclusion. So because the sukuk is structured to be compliant with the Sharia, what that means is that a lot more people can participate in the instrument regardless of their faith.
There are quite a number of joint financial advisors to this issue. How can potential investors actually subscribe to this bond?
Oh, so it's quite easy. To invest in the fund, to invest in the sukuk, what you can do is that you can visit the website of the Debt Management Office. That's the dmo.gov.ng. You can also visit the websites of the financial advisors. There are 2 financial advisors, Lotus Financial Services Limited, and that website will be lotuscapitallimited.com. You can visit the website of the other financial advisor, which is Evian Quest Merchant Bank, and that website will be evianquest.com. You can also visit any registered stockbroker. You can visit or contact any primary market dealer association.
What happens in the case of oversubscription, as has been seen in the past? Will there be refunds?
So we'll wait and see. Hopefully there's a possibility that some of that will be able to be taken up.
And are there any exit opportunities for investors? Will the security be listed on the exchanges?
Yes, the security will be listed on the FMDQ Securities Exchange, as well as the Nigerian Stock Exchange. So investors who want to exit before the 7-year tenure can sell their units to other investors.
Head of Research and Investment at Lotus Capital, Ndakwa Mijindadi, thanks for speaking with us on Business Morning.
Thank you very much.
Let's just do you a reminder of the capital importation data which came in this morning. Of course, the Statistics Office says that total value of capital importation into Nigeria stood at $5.85 billion in the first quarter of 2020, representing an increase of 53.97% when you compare to the fourth quarter of 2019, and minus 31.19% decline compared to the first quarter of 2019. According to the NBS, the largest amount of capital importation by type was received through portfolio investment, which accounted for 73.61% of total capital importation, followed by other investments, which accounted for 22.73% of total capital, and then foreign direct investments, which accounted for 3.66% of total capital imported in the first quarter of 2020. Now, a further breakdown of the data shows that by sector, capital importation by banking dominated the first quarter of 2020, reaching $2.99 billion of a total capital importation for the first quarter. And the United Kingdom emerged as the top source of capital investment in Nigeria, with $2.9 billion, and this accounted for 49.68% of the total capital inflow in Q1 2020. By destination of investments, Lagos State emerged as the top destination of capital investment in Nigeria in the first quarter of 2020, with $5.13 billion. Of course, this accounted for 87.72% of the total capital inflow for the period. By bank now, Standard Chartered Bank of Nigeria Limited emerged as the top of capital investment in Nigeria in the first quarter with $1.65 million, and this accounted for 28.3% of the total capital inflow in the first quarter of 2020. And let's go over the latest numbers from the crude oil markets this morning. Brent crude is actually up to $36 a barrel, thanks to an increase in faith in the market that producers will stick to commitments to cut crude supply. And that's in addition to the fact that more cars are back on the road as coronavirus lockdowns are eased around the world. Brent crude futures were up 1.72%, trading at $36.12 a barrel, adding to a 1.1% gain on Monday in thin holiday trading, and the U.S. WTI futures gained 3.43% to $34.39 a barrel. The market was boosted by comments from Russia reporting its oil output had nearly dropped to its target of 8.5 million barrels per day for May and June under its supply cut deal with the Organization of the Petroleum Exporting Countries and other leading producers, a group known as OPEC+. Russia's energy ministry said, or on Monday, quoted the minister, Alexander Novak, as saying a rise in fuel demand should help cut the current global surplus of around 7 to 12 billion barrels per day in June or July. We'll be looking at the markets when we return in just a moment. Please stay with us. Now let's take a trip to London, where Juliana Olayinka is back from holiday to tell us the latest business headlines this morning. Good morning, Juliana. Welcome back from the holiday. Of course, it's the morning after the bank holiday. How upbeat are the markets, and what should we look out for as the week rolls by?
Good morning, Bissy. Well, it's a bright start to the FTSE this morning. It is a short trading week, but there's been a triple-digit rise on the equities market. There's definitely a sense of optimism after Prime Minister Boris Johnson said that Britain is back open for business. Some of the main risers this morning were JD Sports, that's a sports retailer. Their shares were up 8%, as well as Next, that has tried to steer away from the curb of the fall in High Street. Their shares were up by about 6.9%. But it appears, especially because Spain have said they want people to come and holiday with them, and they've also stopped that 14-day quarantine, that shares in travel and stocks are the biggest risers of the blue chips this morning. TUI, they jumped 37%. That's the biggest riser on the FTSE 100. And also the BA owner IAG, their shares were up 17% this morning. At the moment, oil and gold are both trading flat, and the pound is 0.25% up against the dollar. It is the end of the month. We did have the PMI flash figures last week. What we're going to get the full look of how May shaped up in the UK later on this week, Missy.
PM Boris Johnson has announced that outdoor markets and car showrooms will be allowed to reopen in England from Monday next week, while other non-essential retail premises will be allowed to open in 3 weeks. What plans are in place for the reopening of these businesses?
Well, it's a good question. I don't think that's yet to be answered, and that's what business lobby groups are insisting the Prime Minister does come up with. We are expecting him, of course, to be at the dispatch box in the House of Commons tomorrow during PMQs, and we will expect the leader of the opposition to be grilling the Prime Minister about that. But he has said that businesses are opening. He does want to get the economy ticking. He did reiterate that we don't think the virus is spread on the outdoors, which is why on the 1st of June, we will be expecting any retail space that has an outdoor area to be opened. On the 15th, those famous pictures that we used to see in Knightsbridge and on Oxford Street could be bustling with customers again, as all non-essential shops will be given the go-ahead. What the Prime Minister did reiterate yesterday is that there will be guidelines given to each and every single business to ensure that they are COVID secure, and there will be safety and health checks that they must make sure they can adhere to make sure that social distancing and hygiene measures will be kept in place. And local authorities, so councils up and down the length and breadth of England, will be allowed to spot check on businesses to ensure that they're keeping their work staff safe.
Many thanks, Juliana. We'll see you again at 1:30. All right, let's go over the capital importation data for the first quarter of 2021 again. Of course, fresh data coming in this morning from the Statistics Office shows the total value of capital importation into Nigeria stood at $5.85 billion in the first quarter, representing an increase of 53.97%. According to the NBS, the largest amount of capital importation by type was received through portfolio investment, which accounted for 73.61% of total capital importation, followed by other investments, which accounted for 22.73% of total capital, and then foreign direct investments, which accounted for 3.66% of total capital imported for the period, talking about the first quarter of 2020. Now, by sector, capital importation by banking dominated, reaching $2.99 billion of the total capital importation for the first quarter. The United Kingdom emerged as the top source of capital investment in Nigeria for the period with $2.9 billion, and this accounted for 49.68% of the total capital inflow in the first quarter of 2020. By destination of investments, Lagos State emerged as the top destination of capital investment in Nigeria in Q1 with $5.13 billion, accounting for 87.72% of total capital inflow in the first quarter of 2020. By bank, Standard Chartered Bank Nigeria Limited emerged at the top of capital investment in Nigeria with $1.65 million, and this accounted for 28.3% of the total capital inflow for the first quarter of 2020. And backtracking again to the crude oil market, now the prices are actually higher this morning thanks to increase in faith in the market that producers will stick to commitments to cut crude supply. And that's in addition to the fact that more cars are back on the road, of course, as governments across the world ease the lockdown imposed to curtail the spread of COVID-19. Brent crude futures were up 1.72%, trading at $36.12 a barrel earlier on, and that adds to a 1.1% gain that was seen on Monday in thin holiday trading. And the US WTI crude futures were also up 3.43% to $34.39 a barrel. That market has been boosted by comments from Russia reporting its oil output had nearly dropped to its target of 8.5 billion barrels per day for May and June under its supply cut deal with the Organization of Petroleum Exporting Countries and other leading producers, and that's the group known as OPEC+. Russia's energy Ministry on Monday quoted the minister, Alexander Novak, as saying that the rise in fuel demand should help cut the current global surplus of around 7 to 12 million barrels per day by June or July. Now, there's a trend that has been playing out in the financial services sector lately, and that's of corporate debt issues and securitized tradable assets through bond offerings and short-term unsecured promissory notes. One of the most recent of such exercises is the Series 1 5 billion naira 3-year 10-year bond program of Evian Merchant Bank, which was recently listed on the Nigerian Stock Exchange. The head of investment banking at the financial institution, Mr. Patrick Ngbenwelu, joins us now to look at this trend. Good morning and thanks for joining us on Business Morning. Tell us, what's the motive behind the recent push for capital raising exercise across the financial service sector? Your bank has just raised and listed 5 billion naira bond. Of course, United Capital has also just concluded its commercial paper, and now Coronation Merchant Bank is out with its own 100 billion naira commercial paper. Tell us what's fueling this appetite for debt in the COVID-19 economy.
Good morning. Thank you very much for having me on board. One of the things which we're seeing currently in the domestic market is the fact that interest rates at the moment are relatively quite low. So as a result, quite a lot of issuers are intending to take advantage of the current low interest rate environment by locking into some of these the coupons that are available. So as a result, we have seen a spike not just amongst financial institutions, but also amongst a number of corporates. And we have quite a few subnationals who are also going down the same route.
Where does Evian look to channel the proceeds of its bond to?
Well, in summary, basically, the main purpose of the bond, really, the net proceeds we utilized to purchase 3-year 10.5% senior secured notes. But the transaction would enable us to enhance our assets and liability management strategy. We'll be deploying it towards being able to diversify our source of funding and also to help us to expand our loan book.
But do you intend to invest some of these funds in government securities, which seems to be largely aggressive with yields now?
Well, at the moment, the objective really is for us to use the funding, the proceeds, to help us to diversify our loan book and to create more loan assets. But it's worth mentioning, even though, yes, we are allowed to invest in government securities, that's not the primary objective at the moment. But it's worth pointing out that the transaction was heavily oversubscribed, but the main focus at the moment is for us to utilize it towards managing our balance sheet much better.
How much of liquidity do you think your bond will enjoy at the secondary market, given the crowding out effect of the federal government's bonds?
Well, we're confident that to the extent, there are parties in the secondary market who would look to purchase the bond, we know that the appetite will be quite high, primarily because when the issue was closed, it was 2.3 times oversubscribed. So we remain confident that to the extent there are trades in secondary, that the bonds will be quite attractive to investors.
Head of Investment Banking and Evian Merchant Bank, Patrick Ngbenwelu, thanks for joining us on Business Morning.
Thank you very much.
And that's where we'll call it today on today's program. Thank you for watching. I am BC Adebayo. See you tomorrow.